Alright, we're going to continue our journey into technical price patterns. This week we're going to be talking about triangle patterns. And the first one I want to talk about, ascending triangles. Ascending triangles are 80% of the time bullish price patterns. What you need for an ascending triangle, first is your uptrend. Then you're going to see this type of consolidating price action, which brings me to the point that all triangle patterns are consolidation patterns / continuation patterns. So they're consolidation in the fact that they kind of take a break from a previous trend, and their continuation in the fact that they continue in the direction of the initial trend. So with that in mind, we have our uptrend on the ascending triangle. We've got this consolidating price action right here. We've got resistance, so we're seeing consistent hits at that resistance level, and we've got an uptrend. So it creates this sort of triangle, and in this case it's an ascending triangle because we have an ascending line going into a flat resistance line, creating this ascending triangle price pattern. Ascending triangles are bullish, and what you want to do in this case is wait for the break of resistance. So you want to wait for that to confirm this position, or to confirm this price pattern rather. And so before entry, you want to wait for this breakout, and you want this spike in volume on the breakout. These are the two most important things with regard to this position. Wait for the breakout and ensure that you have the spike in volume on the breakout. Key. Another important thing to mention, you definitely have to make sure that there's an uptrend prior, because this is a bullish continuation pattern, which means it has to be a continuation of a previous uptrend. So if you don't have an uptrend prior to the pattern, then there's no ascending triangle there. There's no argument for an ascending triangle. So that's one thing that a lot of people leave out of the equation, and that's a very important element, the whole uptrend prior aspect. So when you enter this, you wait for the break of resistance, and you can enter, a lot of times it will retrace back to this resistance turn support level. But I mean, you can enter as soon as it breaks pretty much, as long as that volume is there. And the way you measure the move basically is the height. So here is what is called the AB height. So we would say A is the resistance line and B is the uptrend support line. So your AB height is the difference between the top, the resistance line and the start of the uptrend support line at the start of the ascending triangle. So we always use the simple stuff here. Let's just say our A line is 90 and our B line is 80. So we've got a height of 10, right? And so you just add 10 to this 90 resistance breakout, and your target would be 100 is your target. So you place your target at 100, and you place your stop either just under this resistance line, or, because that resistance should act as support now. I typically like to give it a little bit more breathing room and put my stop just under that uptrend support line. But I only do that if the target move is high enough to warrant doing this. So if my reward to risk is staying 2 to 1 or better, preferably 3 to 1, 4 to 1 or better, when putting my stop here. So I mean, that's basically a ascending triangle for you, how to play it. Move on to descending triangle. It's the same type of situation. You want the downtrend prior. This is a bearish spread, or bearish price pattern. So descending triangle, bearish, it's a continuation of a downtrend. You're getting the breather right here where it's creating this support level. So we'll say that's 80. And we're starting the kind of downtrend consolidation there, a little bit more of a consolidating downtrend into this support. And we'll say the start of that was 90. So we've got our height of 10 right there. So our target would be 70 in this case. And same situation, you want to wait for the break, in this case, of support rather than resistance in the ascending triangle. So you wait for the break of support at 80 in this example, and you want to make sure that break takes place on strong volume. You enter the short position here, and you would place your stop either above that support turn resistance level or above this downtrend resistance level, depending on how much room you have from your entry to target, and making sure that your risk to reward makes sense. So bullish, bearish. Lastly, we've got symmetrical triangle. Symmetrical triangle can be either bullish or bearish. It just depends on the direction of the trend prior to the creation of the formation. In this example, we have an uptrend prior to the formation of the symmetrical triangle. So it would be a bullish symmetrical triangle pattern here. But if we had a flip side, if we had a downtrend going into the symmetrical triangle, it would be bearish. You would be anticipating bearish activity. Just FYI. So we'll look at this case, uptrend. And what you see here is you'll see tightening price action. It creates that symmetrical triangle. So you've got, a nice symmetrical angle going in rather than this descending triangle angle going into support and this uptrending going into resistance. You just have straight up symmetrical price action going on. So it's just tightening up, and then it breaks. In this case, we're going to see a break of this downtrend resistance line, and it will see continuation to the tune of whatever the height at the start of the symmetrical triangle is. So our symmetrical triangle, we've got the downtrend going into the uptrend. You want to wait for this break right here. You want to wait for the spike in volume. Ensure that that spike in volume is there because that is what confirms the breakout action. Now, measuring the move on these patterns is a little bit different. You want to see, say the base here at the start of the move was, we'll stick with our 80, and the top was 90. That tells you we have an AB height of 10, right? So we've got an AB height of 10, but instead of measuring it, in this case we measure it from support, in this case we measure it from resistance, you have to measure it from the point of breakout. So let's say that this breakout level was 85. You're going to add 10 to 85. You're not going to add 10 to 90. So in this case, our target would be 95. Target. So you just got to keep that in mind. Make sure you're doing your measuring implications correctly. Some of the key points I want to talk about. Remember, this is a continuation pattern. So like I said, you have to have that uptrend or downtrend prior to it for it to be valid. In the case of a descending triangle, you have to have the uptrend prior because it's a bullish pattern. Descending, you have to have the downtrend prior because it's a bearish pattern. Symmetrical triangle, you just want to make sure that you're trading in the direction of the previous trend, or the trend prior to the consolidation pattern. Volume, as always with these price patterns, volume is so key on this breakout. So you want to wait for the break, and you want to ensure that the volume is there on the breakout. Otherwise, it's pretty much, your probability of this trade coming, or this pattern coming to fruition is slim. Lastly, the last thing I want to talk about with these is what you want to, in these patterns, is you want to see the breakouts either 3/4 or 2/3 completion of the triangle. Now what I mean by that is, you can see in this case the breakout took place about 3/4 of the price action completing through, to the nose of this triangle, if you will. So if you get the price pattern, so the price action should not exceed 3/4 or 2/3 of filling this entire triangle. So if this price action continued going like this, getting into that's null and void pattern. You need to see it break out prior to, right about 3/4 is optimal. 2/3, 3/4, somewhere in that range. Same goes for descending triangle. If this would have kept on continuing the price action, null and void. Got to have the breakout prior. Same here. And this isn't the best example, but I'm no professional artist, so but we got to break out. It might have exceeded our max point in this drawing, but you get the point. So keep that in mind as a key point with regard to these continuation patterns when you're trading them in real life. See you next week.